Definitely. Well, hi everyone. I just first off want to welcome everyone and thank you so much for joining us. I hope everyone is staying safe and healthy. And like Brian mentioned, my name is Rishan. I'm a sophomore at Penn and a member of the Wharton FinTech Club. And I'll just be going over a few quick logistics before we get started. So first off, the Wharton Undergraduate Finance and Technology Group and the Wharton Undergraduate Entrepreneurship Club is very excited to be hosting Nelson Che, CFO of Uber. For the next hour, Nelson and Professor David Shu will have a conversation on Nelson's career, reaching from Wall Street during the financial crisis to Silicon Valley today, Uber's post-COVID strategy, and more. 15 minutes will be dedicated to audience Q&A, and to participate, please just submit your question through Zoom's Q&A box during the first half hour of the talk. And if your question is selected, then you'll be asked to just enable your audio and pose it directly to Nelson during the live session. This event is being recorded, so please just plan accordingly.
Now on to some brief introductions. We'll keep them short so we can get to the main event quickly. Nelson Che is the CFO of Uber. Previously, Nelson was the CEO and president of the Warranty Group. And before that, he also served as the president of CIT Group, and he was the CFO of Merrill Lynch. He also serves on the boards of Thermo Fisher Scientific and the Penn College of Arts and Sciences. And just going on, he also graduated from Penn with a bachelor's in economics and got his MBA at Harvard Business School.
Moderating this evening's event with Nelson Che is Professor David Shu. A huge thank you, Professor, for moderating today's Fireside Chat. For anyone interested in entrepreneurial innovation and management, you can take Professor Shu's course, Management 612, Managing the Emerging Enterprise, this coming fall. Without further ado, we'll hand it over to the speakers.
Okay, thank you everyone for joining us on what is a beautiful afternoon in Philadelphia. We're very fortunate to have Nelson. Thank you so much for being here with us. It's really this nexus of finance, technology, entrepreneurship, innovation, fintech. You bring it all together in just one person. Before I prepared several questions, but what I'd like to do is just, before we get started with those, invite you kind of with the benefit of some hindsight, thinking about your personal experience at Penn, your first set of jobs, and just the arc of your career. Like if you could point to some key inflection points, some key influences, just give us the broad brushstroke. Of course, we didn't have the time to go through all the detailed positions that you've been in, but we'd love to hear from you a little bit more personally about what are those key moments in time that were so instrumental in shaping your career to where it is today.
So first of all, thank you very much for having me. I enjoy speaking to students, and I appreciate your interest in listening and hearing a little bit about my story. I do hope everybody is staying safe and healthy. As you know, this is an unprecedented time, and it's impacting all of us and all of you. I am apologetic for those who are at Penn right now or at other schools, universities, because, at least for me, my time at Penn was some of the best times I've had. I grew up a lot. I had a lot of fun. I really enjoyed my experience there. And for all of you, hopefully that many of you will be able to get back on campus if you're not already and have some normalcy as we continue to make our way through the pandemic. For those that have either family members or others you're working with as well, I do hope that I wish the best for all of you. And so it's been impacted every single person in their own way, and none of us should judge how that is. But again, I hope everybody is safe. And the good news is we do see some light at the end of the tunnel. So in terms of your question, I would say that most of you are probably ahead of where I was when I was a sophomore or junior at Penn, which I know many of you are, or in whatever school you're at. I didn't really know what I was going to go do. There was a little bit of good fortune in my path. Some folks that I've known for a long time would say I'm a little bit like Forrest Gump, where things just kind of happen. I do have 3 kids. 2 of them are actually at Penn. One's a senior and one's a freshman. And my advice to them is to follow probably a more traditional type path. When I graduated from Penn, I got to Penn candidly because I did play on the football team. I was a pretty good high school player, and so when I was applying to colleges, it was really who was actually recruiting me. And so a couple of Ivies did, and I knew I wasn't going to be good enough to go beyond that. And so I ended up at Penn just because I had the best time on my visit there. I had a great experience. I was a good high school football player. I was not a good college football player. So I got a little bit of time on a game that we were getting crushed by Army, and I got some time against Columbia because back then they weren't very good. Besides that, I watched a lot and I practiced, and I was a little bit of a tackling dummy. I still have a lot of great experiences from my time there. And I didn't use my time in college and did really grow up a lot as a person. When I graduated from business school, I really didn't know and didn't expect that I would either end up on Wall Street or in Silicon Valley. I did think, rightly or wrongly, that I would have the opportunity to sit in the C-suite seat. And so I really just pursued trying to understand business models. I was at the time of getting out of business school. I was also one of these people that I worked at PepsiCo, which back when I was coming out of college, which was 1987, was what they called an academy company. And you probably would have put GE in there and a few other large companies that had great management programs. And so I was fortunate to go through there. So I had confidence I could get through, but didn't want to be tracked. And so I did things in a little serendipitous way. When I was at business school at Harvard, you could actually do a case study instead of, and do a consulting project instead of classes. And so I signed up, but when you went to the office to see, it was like with the Mass Electric to do some kind of utility consulting project. So I just did my own thing. And so back then, the Tiger Woods before Tiger Woods was a guy named Jack Nicklaus, and he was the best golfer all the time. So I wrote him a letter. I got my roommate one with the Bermuda Department of Tourism, and I did a project for Jack Nicklaus's company and with a couple of friends. And not surprising, the head of the MBA program decided to be our faculty advisor because he liked golf. And it was a little bit how I kind of managed my career, which was a little bit ad hoc. I got my first job out of business school instead of going through the normal process. A lot of my colleagues went to consulting or banking back then. There was less opportunities in tech. I ended up going to a big industrial company called Philip Morris. It was a consumer business. It was in tobacco. I was trying to diversify out. I had to be in New York because I was engaged to my wife, and she was going to be a second year at Columbia. And I really just got the job because I picked up the annual report and I wrote the most senior person in there that I thought would talk to me, and they did. And I went in and interviewed, and they were trying to diversify away. And so I went there. And then from there, I really just kind of followed a path to try to learn about different businesses. I learned in consumer products, and if you understand the value chain of, I worked at Pepsi or Miller Brewing Company, the single largest ingredient was marketing. It's like 23 or 24 cents of the dollar. The can or the bottle is in was 10 cents, but the actual material was like nothing. And so after about a few years, I went to Allied Signal, which is a large industrial company, which is now part of Honeywell. There's a guy named Larry Bossett, who was a GE person. And back in the 80s and 90s, they talked a lot about total quality management. And so I was just interested, and I'd learned. And in that business model, I use that as an example. In a chemical company, in that same dollar of value chain, about 90 cents was the raw material. So the operational excellence got you your margin. And so I went and did that for a little while. I was a pretty good chemistry student in high school. I avoided it in college, and here I was. And at that point, I was running a small specialty fluorocarbon business. And so then I decided to move on again, and I went to Bain Capital roll-up in specialty diagnostics, which is you go to the doctor, you get a test, they test you out. And I did that for a few years. We bought a bunch of businesses, consolidated, and bought some other businesses, and I learned there. And then what I would tell you is my career as it is today really took shape in 2000. I joined a small company called Archipelago. I was employee number 56. And you remember when you join the startup, what number you are. And it had the audacious goal to become the first fully electronic stock exchange. And they had changed the order handling rules in this country in terms of how stocks were traded. And so I joined in 2000. When I joined, the Archipelago was doing less than 1% of the NASDAQ listed trades. Over the course of the next few years, we built out the business. We took it public in 2004. At that time, we were doing about 25% of the NASDAQ listed trades and 10% of the New York listed trades, and started an electronic options exchange. We merged that into the New York Stock Exchange. And the serendipitous part of that was I became the CFO of the New York Stock Exchange. We took the New York Stock Exchange public and global. And I started working closely with a guy named John Thain, who was the CEO of the New York Stock Exchange. And it mattered because when the financial crisis started to hit in 2008, John left to go become the CEO of Merrill Lynch, and he brought me with. And so that was a different type of experience than the coronavirus in terms of what the history of business and globally. So I was in the cockpit in terms of one of the major players during the financial crisis of 2008. And it was a pretty heady time, and I learned a lot. I was feeding by the fire hose and living with back then we had Blackberries. It was an incredible time. And then John and I went after we both left when we sold Merrill Lynch to Bank of America to a company called CIT that had gone bankrupt during the financial crisis. And again, we brought it back and then built it up. And then I went and ran a business for TPG, and here I am at Uber. And so it's been been a pretty good journey. I'm fortunate because I've again been witness to a number of different parts that are pretty important parts of the global business landscape. When I joined Uber, my hypothesis was I've been here 2.5 years, and everybody understands. And for a company that's a little more than 10 years old, it's become part of all of our lives in terms of how we move. As you guys know, we're in over 60 countries today. We're by far the predominant leader in terms of mobility in all those countries. So our market share, or we call category position, is more than 2/3 in every place where we operate on the ride sharing side of the business. And then, as you know, we are big in food delivery. And so we're the largest food delivery business outside of China today. Most people in the US see us, especially competing against DoorDash, but we're obviously leader in a lot of important marketplaces as well, and that business has kind of grown quite tremendously. What I would tell you is that when I joined 2.5 years ago, I knew there'd be a big lift because a lot of the problems that happened that many of the business schools, including Wharton, write about in 2017 that pertain to our founder and things that had happened. And again, I was the person charged with both building out the processes, taking the company public, putting together a capital allocation framework, and then obviously during the crisis, using that crisis as the opportunity for last year, which I'm very pleased with, because in the early days of the lockdown, our rides business, so in 2019, we did $65 billion of gross bookings. 50 billion plus was our rides business. Last spring, around this time, it was down about 80%. So I worked pretty hard with a small group of folks on our team to come up with a plan. And then we quickly got Dara and the rest of the team ready to go. And if you look back, what we did was we really right-sized the org. And so we took out about $1 billion of run rate cost savings. We set and plan a motion to really invest in our delivery business, as well as our freight business. We executed a number of transactions to get us out of a lot of businesses. So we did 21 transactions last year in terms of reshaping the company. Some of them were divesting businesses like bikes and scooters or our autonomous business, and some of them were acquisitions like Postmates. And we really leaned into our internal capital processes. And so all the time we had ample liquidity to manage through the crisis. And I do believe that when the Whartons and the Hart HBSs and the Stanfords write all their things about who managed the pandemic the best, I'm pretty confident Uber's going to stand tall. If you look right now in terms of how we started the year, and you just look at, if you believe the Wall Street analysts in terms of who they think the big recovery stocks are, we're on everybody's list. And so, we took the COVID crisis to really reshape the business that we are today. When I joined, we were the Uber everything, and now we're very much focused on mobility, delivery, and freight. And I think that most people, as we see the recovery come, believe that Uber is positioned to be the winner as we go through it. I mentioned earlier how big our mobility business was pre-pandemic. So think about this: our delivery business is now a $50 billion run rate business on a gross bookings basis. So when our mobility business comes back, the rideshare business comes back, it's clear to see how it's easily $100 billion plus gross bookings type business. And again, so we're seeing a lot of the positive green shoots as marketplaces are starting to open. And so again, I'm proud of all the work we've done. It's not been easy; it's been a lot of work, but we're really well positioned now. And so now it's a lot of tactical work to get through it. And we announced we will hit profitability in the back half of the year. And so I think the company is well positioned, and obviously there's lots of things going on in the broader world that have impact on it. But if you believe in the world recovering, we're confident in terms of how we'll fare during that recovery.
Thank you, Nelson. Lots of really interesting themes. I think one thing that stuck out to me was not only the range of companies and industries that you've been in, but the fact that you were CFO at Merrill Lynch in 2007. You lived through the CIT bankruptcy. We know all about the culture issues at Uber under Travis, and then, taking Uber public. Like, if you could isolate a few themes about this crisis management, thinking about not only everyone tends to focus more on the challenges, but the opposite side of that are the opportunities. You mentioned that all the restructuring, et cetera, that you're doing at Uber. Could you give us some sense of the learnings you had through the financial crisis, through restructuring, through even COVID? Like, are there some general lessons that you take from what tends to work well, what doesn't work well, that could be generalizable to the next pandemic or the next crisis?
So what I would say is during the financial crisis, people really didn't understand the connectivity. And even if you look on the recent news of what's going on with Wong's private, office, even in today's day and age, you saw the lack of connectivity because they don't have to come public with their holdings and the impact it's having on Credit Suisse and a few others. So back then, that was before Dodd-Frank, there was even less in terms of understanding that connectivity. And so what I would tell you is I was making decisions back then based more on judgments. And history has proven that I got it right more times than not. But I would tell you, we played it right. And so we had a bunch of things, and Merrill Lynch was one of the best places on Wall Street in terms of originating, distributing securities. And where they got stuck was trying to warehouse them and play principal. And they were, I think that the management team before that was trying to aspire to be Goldman Sachs, and it wasn't. And it didn't have the risk frameworks. And so on our balance sheet, we had a lot of these securities that were propped up in the pre-financial crisis era that, we just didn't know what the value was going to be. And so when the crisis hit, Lehman Brothers was a similar shop going through the same similar things. And I'll remember in the first quarter of 2008, they actually had a gain because what they did was they hedged their exposure by hedging the ABX, which is kind of a thinly traded ETF of about 20 housing stocks. And that's what they did in order to do that. And what we did was we just took our losses and we raised capital. And then what happened was in the second quarter, they got whipsawed because it continued to go down. And what happened is people back then, they tried to hedge their positions with thinly capitalized monoline insurers that when the value of the underlying went down so much, then you also had to take a loss reserve against the hedge. And so you got whipsawed in the situation and it spiraled out into the outcome that happened at Lehman Brothers. And we didn't do that. And so one of the things I learned from there and learned from others as well was, you can't believe your own book. And so when people are talking about what the value is, go sell some, let's go see what it's really worth. As a broker dealer, we were mark to market, as was Lehman Brothers and Goldman and Morgan Stanley. The banks, the B of A's, the JP Morgans, they could hide behind bank accounting, which is a different accounting role where you mark to maturity. And so I learned a lot. You trusted your instincts a lot. We played it straight, and maybe because it wasn't our book, right? We didn't put these securities on the book. And by the way, that proved out to be the right path. And over time, what I'll remember is the weekend in September when we sold the business to Bank of America, they looked at both of our books. And you could go because there were so many club deals back there where all of the banks were a lender to. And so it was the same exact security. And you could go, and so if B of A had it marked at 80 and Lehman had it at 70, I'm making up the numbers, we were probably at 60. And so you could go across the book and just see that. And then when recovery came in 2009 and 10, that book marked up quickly, and that actually was very beneficial to Bank of America. And so again, I think the actions we took, which at time we did without full information, proved out over time to be the right actions. And a lot of it was we were pretty objective about the outcome. And so we didn't try to believe or whatever. We just tried to prove it out. And so I think that was an important lesson. In terms of, what happened at Uber and how we managed through the pandemic, it was a little bit different. It was obviously personal for everybody because it impacted all of us and all of our lives. And I'm sitting in a study in my house. But, I did have more certainty in terms of the outcome because of my experience. And there is really, and I was pretty calm about the whole process. And I did use it as a burning platform to drive some of the change that happened. And I knew when we went public that all these companies you're hearing about now and some of these SPACs that people are investing in now, there is a path to profitability question that has to be answered. And, as I talked about, and people would ask me about our autonomous stuff, we were spending $500 million a year, and I couldn't look an investor in the eye in terms of when is that going to be on the road. I heard a very, well-known person on Wall Street talk about a LiDAR SPAC that they're invested in, talking about how all cars are going to be autonomous with LiDAR. Well, that's actually not true. And so if you understand the technology, the LiDAR detects things. You still have to do the machine learning to detect what it is. And it's still difficult to understand if they see a shadow, is that a person? Is that a branch or is that just sun going through the tree? The amount of work that's going to get there to get to level 5, which is a true autonomous car, is a very difficult one. And at Uber, we run the largest network in the world. So we just want to make sure the cars are on our network. We actually don't have to own them. And so I had a lot more confidence in terms of managing and have the ability to use the crisis to help drive to the right place where we are today. And then, by the way, the one benefit was really just the pull forward in terms of the demand for delivery of food and other things. And so we're going to be the big beneficiary of that.
Okay, thank you. One of the things that I want to pivot to a little bit is I think many on the call would envy having a career like yours. CFO of New York Stock Exchange, of Merrill Lynch, of Uber, et cetera. So my question to you is, how much do you think about investing in general skills versus specialized skills? And so for example, could you now then pivot in a couple of years to be CFO of any company or even CEO of any company? And how do you think about the skills that you invest in along your career trajectory that would set you up well for your position, the next position as you ascended the corporate ladders?
So I'll answer in 3 ways. So the first thing, and I tell this to a lot of folks that I talk to, is that you have to have the discipline. And if there are 3 things you have that all of us have, which is how you can spend your time. You can spend your time on your career and your work. You can spend your time with your family, and you can spend your time on you. And you is being in great shape, or being, I like to play golf and I'm not so good now, but I used to be okay, and doing those kinds of things for yourself. And I think you can only do 2 really well. And so all of us get to decide. And I'm at the point in my career, in my life, where I have lots of friends who've made different choices and are in different places. And so the only thing I would encourage all of you to think through is what kind of life you want, and you get to decide. And you're going to get out of it what you put into it. And you're all talented because you're all listening in as part of one of these clubs at Wharton or a different institution. The second thing I would tell you is you should try to be objective about yourself. And so, at least in my case, I've learned over time that I enjoy working with the team. I think I'm differentiated as part of management, and I've had the opportunity to be CEO as well. It's because I've had that, it's less about the ego, it's more about being part of the right team, and maybe because I played football versus an individual sport. But I also know I'm better on the field. And so I've had opportunities in the past to go be an investor. And I've said no because I just think I'm differentiated on the field. And so knowing kind of what you're good at, and by the way, they bring different levels of reward and other things. I think you have to really understand that. And then the last thing you have to do is not just take the next trade. I think you have to think long-term. And so I tell my kids, try to peak in your 40s, right? Don't worry about it. Try not to, you can get stuck hearing about, the really young person that struck it big and is a billionaire and X, Y, and Z. And that's what you can't do that. Everybody's going to have their own path. And at the end of the day, when you get to be my age, I'm 55 now, you get to decide, hey, how'd that go for you? and hopefully you'll feel okay. And you know, I've had a very interesting career. I've been fortunate to see a lot of things that you mentioned earlier. I think part of it is because I am pretty adaptable. I'd like to think I'm objective. And then the people I work with, I think they trust my judgment. Do I think I'm adaptable to other businesses? I do, because I've been able to work in other business models, and I've been objective about identifying the drivers and then pulling on those drivers. And so I do. I think if you said, well, where would you be CEO? It's less likely I'll be the CEO of Uber. There's a technology bent to it that isn't in my DNA. Could I be the CEO of a financial services business? Yes, you know, for sure, and many other types of businesses as well. It just depends on what the skill base is. And I think you just have to be a little bit objective about it as you think about it, because it's actually not about getting the job. It's about being successful in a job and enjoying doing the job. Because the worst thing in the world you can do is, even if you're successful and if you hate it, that's not so fun either. And so I encourage everybody to think through it a little bit, and really think through it about what's right for you and your personality. I tend to be a little bit more extroverted. I think I probably lead more than I manage. And over time, I think at least I've been quoted, I've been portrayed in the press as affable. And I think that all matters in terms of my ability to be able to have the right positive impact. But that doesn't mean that should be what everybody else wants to be. And you know, one of my kids is probably a lot smarter than I am, but probably less outgoing. And so that might be a different path. And that's good, because we all have different paths that we should all go on. And it's all about all of us just finding happiness as we all define it.
Okay, that's terrific. What one you've characterized earlier on that one key inflection point for you was the archipelago, joining that small startup as employee 20, if I'm not mistaken. 56. Sorry, I've made it up. But how do you think about risk? You know, you were in more established companies before that. That was a key driver in terms of inflection point in your career. And just an additional aspect of this, and it's me reading into you as a case study, but it seems like your relationship with John Thain was quite instrumental in the transition to NYSE, to Merrill Lynch. Even I read that he was on the board of Uber and may have, maybe recommended you as CFO there. So how do you, I guess a two-part question. One, talk to us about the risk in that transition to a startup. And then two, developing those key relationships with ideally people who are power brokers. How do you navigate that territory, or mentorship? How do you navigate that aspect?
So the one thing is I was been fortunate in my career because I tended to work more on the strategic planning side, where I tended to have access to the decision makers. And you learn, it's not just the access to the mentorship, you learn. You sit in a room. And so as people talk about, are we going to go back to work or just live on Zooms? There's a benefit when you're new to your career to be in the office, because there's soft times and there's things you can pick up in the 5 minutes here and there. And even with me and some of the folks that are new in their career at Uber, that you can't get on these screens, because my day's pretty programmed on these screens. The mentorship matters a lot. People make careers. People don't make careers unless you start your own business. And so that's an important thing. In terms of my time, so I will get a lot more when my time is done, discussion about time at Uber, probably at Merrill Lynch and all the stuff I did at New York Stock Exchange. My time at Archipelago, I'll always look back on as the best experience I had, because I did take the risk. There were inflection points along the way where it could have gone either way. I was part of building a business and winning with a very close group of folks. The entrepreneur who founded is also a Penn grad. His name is Jerry Putnam. He got fired from every job he ever had, so he started his own company. He thought, okay, well, I'm not going to fire myself. And he, that guy will forget more about the way stocks are traded in this country than I could ever learn. But he recognized that he needed some people to help him, both develop the company, bring the company public, and everything else. And it was a great working opportunity for me, an experience that I had. And so while the others will, and yes, in the startup, it is different because you are managing as you well on burn rates and trying to get through things. And it did set me up well for, what I'm doing now. And I guess the only other thing I would say is that, you should also know yourself. So not everybody enjoys being in the crisis or managing through things. I like fixing things. And so my only concern is I am somebody who gets bored in the status quo, in the steady state. So that's this, I know myself. And so that's why even when I joined Uber, I knew I was getting into, I've enjoyed the process and the impact I've had. But and so that's going to be the bigger question. Now, the good news is we have lots of challenges ahead of us, so enough to keep me busy. But I do know that, and so I probably don't have the right personality to have joined, General Motors and had a 30-year career. Probably would have been harder for me.
Okay, so it sounds like what you've been talking about is knowing yourself, understanding your skills and your personality, and the fit with the jobs and your satisfaction in the job that can really prolong the longevity and satisfaction.
Well, so you also be honest about, so look at, I didn't, CIT was a much slower moving pace. So that was less, if I look back, oh, did I have great thing? No, I did, it was okay. Right. And I've enjoyed my time at Uber immensely so far. I love my time at Archipelago. I like the churn and the fast pace, and I like making things happen. It's different when you're just putting out loans periodically. And even though we were bringing the company back, it didn't have the same pace. And so, again, I like the pace. And so it is what it is. And then the only other thing is just the focus. And so I have a little bit more time for myself now. So I'm probably in better I had my best physical I've had as an adult, because my kids are out of the house now, and so I can spend more time on me, and work. And before, it was my family first and my work second, and so it was me third.
Okay, no, that's great. I want to turn a little bit more to talking about Uber, and in particular, I think there's been a rise of consciousness at the corporate level in America on responsibilities. Not just, hey, we're the platform that connects supply and demand, but rather we're going to make a judgment, or we're going to take a stand on an issue because we don't like the voting laws in Georgia, et cetera. So with respect to Uber, and I'm going to maybe talk about two dimensions of this possible responsibility, is one is with respect to the drivers. Right. There's been widely reported rulings around the world in terms of responsibilities, classification, et cetera. What is your own take on what should Uber's responsibility be to these gig workers? And I want to ask something a little bit more specific. There've been a widely seen videos on Asian drivers asking people to mask up and, and so think about it broadly in terms of what should Uber's responsibilities to gig workers be on corporate responsibility, and then anything on perspective in terms of this anti-Asian or kind of COVID world in terms of how you think about this.
So those are two separate questions. So let me hit the first one, which is the real opportunity we have at Uber today, right, is today we're going to do 20 million rides by 3 or 4 million drivers, right? And so think about a flexible earning platform that people can go on and earn, right? We don't tell you when you can do it. You get to do what you want. And so that's really the huge economic opportunity that we offer people. If you think about, it was a very much publicized referendum in California, right, about making drivers employees. And California is probably the bluest state in this country. And we won that by an overwhelming margin, because guess what? The drivers don't want to be employees. They don't want to be told when to drive. They want to drive when they want. And there are very few people that actually drive full time. So we, in this country, have been promoting what we call a contractor plus model. So we can offer them benefits because we think they can. In this country, you actually can't do that. And so we are promoting a third way where so gig workers can actually get benefits and have other benefits as well. In the UK, you're right, through the Supreme Court decision, they have a third classification, right, called worker. And so that's where drivers will be. And so we are going to offer benefits and other things as well to workers, but they're still going to set their own time. Despite what you read actually in the media, our company has actually taken the most proactive stance in terms of standing up. And so what I mean by that is that we put out a safety report a year and a half ago. Our large US rideshare competitor has all the stats and they haven't yet. And we put it out because if you're going to stand for something, you got to be upfront about it. And so, and all of your parents will tell you bad things happen after midnight. Well, it's actually true. And it was ugly stuff, but we put it out there because if you're going to do something about it, you got to put yourself out there. We also put out our ERG, our diversity report as well, and our compensation is tied to it. And so, and even if you look at our board of directors, you can go look and compare our board versus other boards as well in terms of our representation, both on gender as well as on color. And so we know that we are doing all the right things. We're doing them because we think they're right. We think that a company of our position in the world has that responsibility to act responsibly. And even on the voter suppression issues, Tony West, who's our chief legal officer, was on CNN talking about it. And again, we don't view it as a political discussion. We just think that people should have the right to vote, and we should make it so people get the right to vote, period. And we actually, during the election, offered rides to help people get to the polls, just like we're offering rides to try to help vaccine, and we've been taking the leadership role on PP&E. And so we know we're doing all these things. As you know, because of what happened post 2017, the media likes to report on more of the bad things that happen. And by the way, bad things happen. If you're going to do that many rides in a day, bad things are going to happen. But if you actually look at the substance of what we're doing, our company, since Dara has joined, has our number one thing about our value at our company is do the right thing, period. And we believe we do. And so, we will just continue to do the right things, and over time, that's how you win the day. With regard to what's going on against, the anti-Asian activities going on there, obviously it's personal to me. It has become a situation where my wife and I and my son, who is in New York, we don't ride the subway. We are mindful of it now, and we lived on it before. We walk everywhere. It is, you start about yourself and then you work your way out. And so obviously it's very troubling about everything going on. It does make us more aware of all the bias and things going on. As you know, we've been very much promoting and marketing, no mask, no ride. And so people who have been misbehaving will get cut off. And the good news is we're coordinating with some of our competitors as well. And so if you're in the US and you have a real incident like that with a driver, it doesn't matter if you're an Uber or Lyft or whatever, you're going to be on the list and you're not going to be able to ride. And so that's just a coordinating thing we're doing. And we've been on the forefront in terms of delivering PP&E. What's going on inside with, in the Asian community is difficult. Every people who've listened in have heard about the model minority myths and all these other things going on. And there's a lot of truth to it. I know during my career that I've had to turn the other cheek. My name has been mispronounced by everybody often, a lot, and you just kind of laugh it off over time. And is that okay or not? I don't know. I grew up in the New York area and certainly have felt it. And even my kids, even in this generation, there are points and times that I know where they felt it as well. And so, I wish there was something we could do. I wish the media cared more. If the media cared more, I think President Biden would actually have an East Asian on his cabinet. He actually doesn't, which is unfortunate. And I think that unlike some other groups, I think people just care less, and that's unfortunate, at least in my opinion. But again, we are doing everything we can to make sure everybody has free access and is safe in our cars. But it's not going to be foolproof because, again, we are connecting drivers and riders, as you know. So.
Thank you. And if we had longer, I think we could have a discussion at length on many of the issues that you just talked about. But our time is short. And so I'm going to ask one last question, and then I have a list of several students who are queued up for questions. So
Great.
my final question for you is, and it's a little bit related to the discussion we just came from, which is there a glass ceiling for Asians, or what can we do to promote, I know, I guess it's the culmination of everything you talked about, but in terms of, are there things that you could pick out, generalities to the Asians, the non-Asians, everyone in this community participating in this call that would maximize their chances of, following in your footsteps? What things, the good, the bad, the ugly that you've seen that could ease the way, or alternatively block the way that we have as a society have to work on, so that more people in your position could ascend to the ranks of senior leadership roles in corporate America?
So I think, first of all, I think you're already seeing it in a smaller way, and particularly in Silicon Valley. And so it's why so many Asians either start their own businesses or go out to Silicon Valley, because in that world, people are able to just become CEO or become CFO. And I think it is still higher to manage the hierarchy. I know that even if you're sitting in business school right now and you're trying to get a job, there's specific programs for gender. There's specific programs for certain groups. Asian males don't qualify. It's no different than when those who applied to Penn, you didn't get any help being an Asian male. You just didn't. And so, it's unfortunately a little bit of where society is now regarding Asians. And I think because Asians have done quite well as a group, if you will. In terms of ascending the corporate ladder, I think it will continue to be hard. I think it's incumbent on me and others who have been able to do it. Most have done it just through performance. So if you look at Joe Bay at KKR, or Q-Sun Lee, who's a very good friend of mine, who's the CEO of Carlyle, they were just excellent investors in working in a company where returns mattered a lot. In my scenario, I think my upbringing and the way I was probably helped me. And my Asian friends would tell me I'm more white inside, and I've been called banana and other thing, Twinkie and other things as well. But I promise you that I've also felt it as well, and over my time. And so, I would say that I think over time the world has gotten better from when I was starting out in my career, way more accepting. If I just even look, where I am, or just joining a club or stuff like that, I was usually the pioneer. Much easier for now for my kids. I think today's folks that are starting in their careers in college and everything else, they care a lot less about it than they did when I was going through it. And I view that all as progress. And I think that's really a great thing. And I think it'll continue. What we have to do is just not let the story stop. And we have to make our voice heard. And we are one of the fastest growing groups, at least in the US. And I heard we're like 18% of the population. I think I might have that number wrong, but we're growing. And so we just have to make our voice heard. And so I do think it's unfortunate that President Biden actually doesn't have an East Asian American on his cabinet, and there were good choices. And I think it means the media doesn't care. And I think that this story has to continue to play out. Obviously, there are lots of things going on right now regarding the safety and security, and so I hope people are safe. But yes, it is troubling to my wife and I, as someone who has a son in New York and 2 in Philadelphia. We are concerned for their safety, and we tell them to be very careful.
Okay, thank you. Let's turn over to the students. The first person I'd like to call on, Nicholas Pulowski. If you could unmute and ask your question to Nelson.
Absolutely. Well, thank you, Mr. Chai, so much for speaking to us. No autonomous system will ever be 100% reliable. I think you'd agree. but at what percentage reliability should we allow an Uber or similar vehicle to drive without a human driver?
So I think the answer is that the reason why we think we're the best place for it is that A, they're going to be very expensive. So if you want to amortize the cost of them, you should amortize them on the system that is the biggest. But we can actually route the rides. And so you can, level 5 is what you're talking about. But if you get to level 4, we could actually dispatch a ride because we also know the roads. And so, yes, if you're going to the airport or you're driving to Midtown Manhattan, it'll be pretty tough. But if you're kind of in the outer borough and you're just taking 3 right turns, we could dispatch a car there. The question is when, and so that I don't know the answer for, but certainly if it can happen first and safest on our network, unless you're in like a Disney World scenario where there's a bunch of gridded streets and that all works. But in terms of like a real world scenario, it should happen first on ours, and I think that there will be dispatch as you get to level 4.
Okay, thank you.
Thank you.
Well, let's turn to Jonathan Kogan, please.
Yeah, thank you. On Uber Eats, in terms of the strategy, in terms of like acquiring and retaining customers, when there's sort of a lot of platforms offering similar services, are you considering vertically integrating and running like delivery only brands like Rebel Foods in India? Or do you sort of want to avoid food preparation just because of its lower margins? And then also, how do you approach sort of exclusive deals with restaurant brands like McDonald's?
So we do approach exclusive deals. A lot of them drive demand. Over time, it's in the restaurant's best interest to not be exclusive. So we were exclusive of McDonald's in the US. And so if you're a restaurant, you actually, many of them want to have at least 2 partners. We think over time that we have the most eyeballs on our platform because we have 100 million monthly active consumers. And we think over time that will win. And the UK is a good example where we were number 3 and now we're number 1 in London. And again, it was just about building out restaurant selection and continue to work through it. And then the last point I would say in terms of how things were going on the restaurant side is, it's early days. We're going to continue to deliver lots of different things. So you may have seen or not that we announced the acquisition of Drizzly. And then we also bought 51% of Corner Shop, which is very large in grocery delivery in Latin America. So, all of those things over time we have to see, but we think that if you want something in the next hour, you should be able to press our button and we can get it. Just like if you want to go someplace, you press the button and we go.
And just a very quick add-on on that, is post-pandemic, is food delivery here to stay and growing?
So David, yes. So it's definitely a better thing. What it probably did is it probably pulled forward demand. And so what happened is in my town, my wife and I we go to the store and we cook. We're pretty old school. We just unplugged our fax a little while ago, and we actually have a landline. My son in New York, and I presume most of the people who are listening in don't have landlines. If they put cable in their unit, it's really so they can have Wi-Fi. And so David, you and I probably still watch cable. And so all it did. And I think if you're starting a restaurant today, I think the pandemic taught you that you actually have to plan for all of it. It's really interesting. If you go to a McDonald's today in the US, it's pretty interesting to watch if you see an old one versus a new one. An old one has a lot of in-dining space. The new ones really they do more during drive-through. And now a lot of them are planning for takeout as well. And so we know it's here to stay. The question is going to be over time, what items, when we get through the pandemic, are really here to stay? So a good example is going to be food delivery, where during the pandemic, people ordered food, and they did both what I would call the staple as well as the top-up grocery items. So over time, will that continue to be the play or not? We'll see. And so, but over time, there's certain things that if you have a number of instances of use during the week, we think those things will matter. An interesting question for us is actually on drug delivery, whereas Amazon's doing the pill.com, so you can actually get it in the mail. So does that need to be something delivered in the next hour or not? And so we'll see.
Okay, great. Let me call on the next person is David Luzong, please.
Great. Thank you again, Mr. Chai, for speaking with us today. My question is whether it was Archipelago in the early 2000s or Uber today against massive taxi systems, what insights do you have to offer relating to challenging incumbents as a disruptive company?
So I think there's one thing about believing you're right and willing to fight on a newer, let's say, better thing. But there's a reality of managing through the incumbents and all the embedded interests. And maybe it's no different than what you guys all see in Washington. And many of you are newer to watching politics about, this is crazy, why can't they get anything done? And when you go to a change company as a disruptor, you'll have that same feeling. And so if you take an Uber in Logan Airport in Boston, you're gonna be like, gosh, this is terrible. You gotta walk like a long way to go find the Uber. It's because the taxi business is entrenched there. And so you're playing the home game. And Archipelago is no different if you try to work through the New York Stock Exchange in terms of the way stocks are traded there. And so again, those entrenched interests become something you have to manage. And we're going through it a lot as we deal with taxi in a lot of different parts of the world. And so what you'll see us end up doing is continue to build out our hailable strategy, because in a lot of parts of the world they are. And so I don't know if you guys saw or not, but we just announced a joint venture with SK Telecom in Korea. Korea is the 7th largest taxi market in the world. It's an aging demographic. They just changed the regulations to allow more of an Uber type dispatch. And so we're partnering with them and their mapping technology. And we're going to build out a taxi type product in Korea. And the other big player is Kakao. And so, we're going to continue to build out our mobility stack. But yes, the entrenched players will get you.
Yeah, as having gone through that Boston Logan Uber line, I can attest it is long. Okay, so let's go to Lucas Chu, please.
Yeah, wonderful. Thank you. So earlier you mentioned your priorities when it came to personal life, and I was wondering how you're putting yourself first now, and what things might have helped you just balance everything.
Well, no, my kids are out of the house, and so when I was trying to, with my wife, raise our 3 children, and had a pretty challenge. I was busy work-wise. I was always working, and so my kids have always seen me. And so almost every vacation I ever went on with my kids, I would spend at least a day or 2 in the hotel room or wherever we were, just working. And they're just used to me always having calls or missing meals and everything else. And so if you do that and you want both to do well, it meant that when I did play golf, when I did it, I remember when my kids were really young, I would tee off at like 6 o'clock and be home at 8 o'clock in the morning, and I would rush. And so if you ask anybody who knows me, I'm like the fastest golfer they ever played with because of those days. So now I'm trying to slow down more. My wife and I have been married for a long time now. She doesn't really care if I'm around a lot. And sometimes she wishes I wasn't. So, I have more time to do stuff for me. And so I can exercise now. We take a lot of walks, and so there is more time that you have because my kids filled such a big part of my day. And whether it was doing stuff with them, just being around, or just, going to their games or everything else, that part I have to, go fill up with something else now. And so, my wife and I have enjoyed it, although, the pandemic brought them home for a little while, and that was a little bit of a treat. So.
And Nelson was not, he was too shy to say this, but it's not just work-life balance. He's also devoted a good amount of his time giving back to organizations like UNICEF, to Penn, et cetera. So it's even trickier to try to segment your time commitments to all these different.
So David, actually, I'm glad you mentioned that. So I think that's all of our responsibility to pay it forward. So look, I feel like things have worked out okay for me. And so my wife and I do try to give back. We try to help students that want to help themselves. So there's a great program called Let's Go Ready, Get Ready we do, and they provide a lot of like tutoring kind of skills for kids who can't afford it, frankly, and help them get into schools and stuff. We do some scholarship stuff at Penn as well, and it tends to be public school, first gen type kids. And so that's where we do spend our time because we want to help people going forward. And I do encourage all of you, because you're all going to be wildly successful, that the way our society continues to evolve is to plant trees whose shade you're never going to get to sit under. And so please, I encourage all of you, as you achieve success, to pay it forward.
Thank you for that reminder. Very important. Our final question, Rishan Sharma, please go ahead and unmute, please.
Awesome. Just again, would like to say thank you so much. Incredibly informative speaker event. I just had one question for you. after reading a lot about the founding story of Uber with Travis and Garrett, and it seemed like a lot of the early strategy was just focused on growth and being the first to the market. But like we're in like an entrepreneurial landscape today with like AWS and stuff like that, where we've seen like other companies replicate and scale very quickly, like Lyft, where there's like that trade-off between growth and learning how to differentiate. Looking back at the strategy, I guess like this was before you were involved, in terms of like just like prioritizing growth in an early tech startup versus like taking time to like establish your product more differently. How do you think that like firms can create and capture long-term value?
So I think that at least in our business, value goes to the leader. And so we're twice as big as Lyft. And so we should extract twice as much of the profit pool, and even more because we're more efficient. I wouldn't challenge the strategy that they had. The question for them was the execution and the manner in which they did it. And so if you think about what Travis and the founders did, think about it. They took this company, right? They took this adjective, they made it a noun, and all of us made it a verb. And as much as all of you know this company, it's a little more than 10 years old. And today, think about the 20 million rides that we're having in over 60 countries today, and the amount of the opportunity it's offering all of our drivers. And think about the ease of just pressing a button and how all of you use it. And whether it's Uber or Lyft or anything, it doesn't matter. I think it does tell you that the marketplace wants more than one. And so the only in marketplace where we're 100% right now is the Middle East, because we bought Kareem, which is the other 50% player. But people are knocking on the door, and the marketplace will always accept some smaller players. But again, I wouldn't do anything different in the strategy. It also has to do with the cycle of time, because remember, they started after the financial crisis. So interest rates are really low. And so the layman term for that was money was free. Delinquencies were really low. So everything people touched back then just grew. And so they could just pump the machine because the opportunity cost of the capital was so low, that I wouldn't change anything in the strategy, and that Travis and those guys are super successful and built a great business, and understood the flywheel and the business model. Whether or not they could have executed things a little differently, that's different. But again, I wouldn't question their strategy at all. And by the way, those who have met Travis, he's a brilliant guy. So, I've had the opportunity to spend time with him. He's a brilliant guy. So,
Thank you. Well, I think our time is coming to a close, and I want to be respectful of your time, Nelson, and the time of everyone on this call. I know I speak for everyone, the organizers, the participants on this call, to thank you very much for your engagement with us, giving up some time on this beautiful afternoon to spend with us, sharing your insights that you've gleaned over your career. There was a question that someone provided me, because they asked, do you prefer Harvard MBA or Penn Wharton? I think the answer is pretty clear with you, and I think there's only one right answer here on this particular.
Well, but by the way, so I'm involved at Penn. My kids are all at Penn, so I'm a.
Yes.
By the way, I didn't go to Wharton, so my wife and my two boys will tell me I wasn't smart enough. So I was in the college, but I'm a Penn person. We're Penn people.
Yes, thank you so much. But so Nelson, when the pandemic lets up, let's get together for a meal. We can continue the conversation. I know that everyone thanks you so much for participating and engaging with us. Thank you so much. And
I appreciate it, and I'm happy to come on campus next fall if things are in person. And I hope you all stay safe, and I thank you for your interest and for your attention. So,
okay, thank you.
Bye bye.
Let's leave it there. Thank you.